Hello everybody, this is Toni Turner and welcome to the market now as of about noon Eastern on Friday, April 27th. Well, Amazon and Microsoft pushed the Nasdaq higher at the open today, but weak reports from Exxon and other energy companies capped gains on the S&P 500 and the Dow Jones. Amazon surged 7.9% to a record high of $1,638 after the world's largest online retailer more than doubled its profit and forecast strong spring results. Microsoft rose 1.5% after topping Wall Street forecasts for profit, while Intel gained 2.2% as strength in its data center business drove a profit beat. Exxon dropped 3.5%. After posting a lower than expected quarterly profit. More than half the S&P 500 firms have reported first quarter earnings so far, and 79.4% have topped profit expectations, according to Thomson Reuters. Okay, on that note, let's go on and look at three charts that could give us some insight into the week to come. First of all, as we normally do, we're going to look at our chart of the S&P 500 Spider, symbol SPY. As you all know, this is the exchange-traded fund that closely follows our S&P 500 benchmark index. Now, as usual, we know that the SPY made an all-time closing high of $286.56 on January 26th. Since then, we've had quite a volatile ride since January, and it is carried on through just pulling back slightly in the last month, in this month of April. It's starting to calm down a little, but we can see that the kind of overall move here is so far to the downside. When I captured the chart today, the SPY sits at $266.12. It's down about 7% from its all-time high, so we're not in correction mode, although we were for a little while. It has dropped twice to lows at about 254 down here in January and again in March. And now we see it has moved back up. It's above the 200-day moving average. It's below the 50-day. Now the 50-day, the green line on this screen, is coming in at $268.46 at the moment, and the 200-day moving average is coming in at $260.82. So the SPY has been for the last week and for part of the month before trapped in this zone between the 200-day moving average and the 50-day moving average. We also have a trend line, a very short-term trend line coming up here from our February lows up to our March lows, and then and it extends up. So we've got support here at from 258 to 260. We have trend line and moving average support. We also have price support from this recent low this week down at about 260. So as the coil winds tighter and tighter on the SPY, and that's what it's doing. We've got lower highs, we've got some higher lows, so we've got a triangle formation again, or we could call it a spring. It's a pressure cooker. So we have to see here in the next week or two, because we've got about another, week and a half of really strong earnings season before it starts tapering off a little bit. Next week will be that. And of course, next week we also have the FOMC rate decision on Wednesday, which I'll talk to you about again in a little bit. So we've got a lot going on with earnings and the FOMC rate decision, and so much going on in geopolitics. And again, the SPY is caught between the 200, which is holding it up, thank goodness for now, and the 50, which is holding it down. So we want to see which way it springs in the coming week. Of course, we're also getting into May, and there's that old saying, leave in May and go away, but it's not always accurate. So it's going to be really exciting next week to see if the SPY can break above this 268 zone here, or if it's going to roll over and head below the 200-day moving average. Now let's go on to the PowerShares QQQ. As you all know, this is the exchange-traded fund that follows the Nasdaq 100 index. Of course, it's fueled by companies like Amazon, Microsoft, Intel, Google, Facebook, and so forth. Now, it gapped up this morning on the back of Amazon's earnings. As you can see, it gapped up this red bar right here. It gapped up, then closed and filled that gap quickly as Amazon also gapped up and then started filling its gap pretty quickly. This is kind of earnings news like Amazon came out with is absolutely incredible and fabulous, yes, but everybody who's in Amazon, when it gaps up, not everybody, but many people think, well, this is the biggest and best it can do. The next earnings report may not be quite so exciting, so I'll sell now and take my profits now. And a lot of times that's why stocks will gap up on good earnings and then start falling again. The QQQ, when I captured it this morning, as you can see, it gapped up and was rejected by the 50-day moving average, which is coming in at $164 and change. When I captured this chart, the QQQ was trading at $162.09. You see this big red candle has filled the gap, and it's now starting to rest on the 20-day moving average. Now, as with the SPY, we have the 200-day moving average coming up from underneath at 154.86. It's still rising, and we have a short-term trend line here from the February and March lows, March-April lows of the Qs. We have this trend line coming up similar to the SPY along with the 200-day moving average. So there's pretty strong potential support at the 154 to 156 area. So we have to see again this week for the Qs, almost the same thing as the SPY. Will it remain trapped for the rest of earnings season between the 200 and the 50-day moving average, or will some really good earnings get it to move higher and break up above 164, or will it have to just remain in this trading range or this kind of cage between these two big moving averages? Hopefully it doesn't move down and break below 154. If that were to happen, we'll probably see another leg down. Our third chart for the day is the iShares Global Infrastructure ETF. Now, it's been quite a while since we've looked at this. The iShares Global Infrastructure ETF symbol is IGF. And for those of you not familiar with this ETF, it gives us exposure to companies, global companies, that provide transportation, communication, water, and electricity services, and that's, again, global, worldwide. Some of the companies, the top components in it are Abertis, Transurban Group, Atlantia, Enbridge, and NextEra Energy, which of course is an American firm you're probably familiar with. Now, the January high for the IGF up here was $46.80. Since then, it fell pretty dramatically when the market fell in February. In fact, it fell more than most. It came right down through its 200-day moving average, then started consolidating along this zone at about the $42 level. Since then, it's perked up and moved back up above its 50-day and 20-day moving averages. The green and red line on this screen have come down, and because of the IGF's strength, the IGF has managed to climb back above the 50-day and the 20-day, and a couple of days ago the 20-day crossed above the 50-day, which is a mild positive for sure. Now the IGF is trading above its 50-day and 20-day moving average. When I captured this chart today, it was trading at $43.79, again above its 50-day moving average. And the MACD, as we see, the MACD line, the black line, and its signal line are both above the 0 line on its scale, which is a positive. So what I'm going to do, if the IGF can continue to climb in the coming week, depending on the behavior of the stock market, I may add shares to my portfolio. Now, my initial stop, as usual, would be a close below the 50-day moving average, which is now coming in at $43.16. That's my initial stop. If the IGF were to break higher and break up over 44.20, this recent high up here that you see, if it were to break above that, of course, I'll turn it into a trailing stop. Perhaps below either the 20 or the 50-day moving average, depending on if you want a shorter or a long-term trade. So keep an eye on the IGF in the coming weeks, see if it can break higher, perhaps head back up toward its 200-day moving average. And I also wanted to tell you that in recent weeks, we've talked about utilities and real estate, the XLU, and the XLRE, which is real estate ETF, or you can use the IYR. That is also a real estate ETF. Both of those appear to be breaking out a little bit. I know we've got a Fed meeting this week on Wednesday, which will probably affect both of those, but they look like they may be bottoming out here and may be starting up, so you may want to take a look at those. And now on to this week's coming economic reports. But first, please join us this coming Monday, April 30th, for our next session of Toni's Market Club. We'll talk about which side of the market to trade, have a mini trading lesson, and I'll give you stocks and ETFs that may become ripe for high potential trades. This is a low-priced, high-value opportunity to learn more about the market, become a smarter trader, and make more money. So please join us. We have a really good time and we make money at the same time. For those who cannot attend our live session, no problem. The recording of our session is available to all of our members just a few minutes after the session ends. For more information and to join, go to tonysmarketclub.com. And now for the coming week's economic reports. Please do remember that we are in the thick of earnings season, and literally hundreds of earnings announcements are made each day. Of course, those big ones like Amazon, like Facebook, like Microsoft, those are the ones that move the market. So you want to be aware of them. As far as economic reports go, on Monday we have PCE prices and pending home sales. Tuesday is May 1st, and we will have the PCE prices and pending home sales. On Tuesday, we'll have the ISM index. Tuesday is May 1st, I should have said. Auto and truck sales. On Wednesday, we have the ADP employment change, our usual crude inventories, and Wednesday afternoon, about 2 o'clock, we'll have the FOMC rate decision. On Thursday, we have jobless claims and natural gas inventories, as usual. And on Friday, we'll have our non-farm payrolls and unemployment rate. That's a monthly report that comes out. And of course, all eyes will be on that Friday morning. Again, join us for Toni's Market Club this coming Monday. Don't miss out on this terrific opportunity to raise your trading skills and your trading profits. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.